So usually it's rock. Dude, we're nailing it, not playing ABBA. So, but that's funny. I like to have fun, try to do something a little different with our music each week. And we had our veterans program last week, and we did I think we did some Toby Keith and some really good veteran stuff. And anyway, I wanted money, something to do with money today. We're doing with IULs, talking about retirement and all that cool stuff. And I want to introduce everybody. I know it's a little bit early, and we still got agents. Hey, here's Chris. I don't know if it's like that with you guys, but my agents like hopping on 5 minutes late. They just like to drive Coach White crazy. So they always hop in 5 minutes. Hey, when I was a wrestling coach for 20 some odd years, Chris, and I my boys knew not to be late, right? Because if they were late, dude, they were running after practice. They would spend more time after practice they did being late, so they learned not to be late. I can't run my agents though, so I got to figure that one out. If I can figure out a way to get these guys to do that, but in the meantime, hey, we're still hopping on. We got 16 now. Let's hopefully we get up there 20, 25, 30. Normally we've been having Chris about 30 to 38 people on these training calls. The deal is they're used to doing it every week. Every day we have trainings at 9 o'clock. And so, we moved this 2 hours later today. So I get it. Sometimes we got schedules already. We're already doing other things. So I'm happy for anyone that made it on the call today. And trust me, I appreciate you guys doing this. And we've got 16, so we're going to get started. We have 16 people. Want to introduce you to one of our representatives with Hartland Financial. His name is Chris Miller. You guys met Asher. Give us a thumbs up if you enjoyed Asher last week, dude. I was so impressed, impressed enough to tell these guys that we are thinking about moving our contracts over to Heartland just for the what they've been supporting us and doing for us. So we're really looking into that. And wanted to do that. So anyway, no further ado, Chris Miller with Heartland IUL guy. So tell us what you've got, Chris.
Sure. Thank you. I appreciate it, Darren. And thank you for allowing me to jump on your guys' call today. And for those that made it 2 hours later, I do apologize. I'm on the West Coast here, so I'm a little bit behind you guys. So a little bit about me. I am the consultant and IUL kind of, I guess, consultant or advisor for Hartland Financial Group. So anything IUL, advanced market related. I do a lot of annuity business as well, but you guys have Asher and Asher's team with his father and Rick Rooks and those guys. So they're a great annuity team. So you guys are in great hands. But that's kind of my genre. So just a little bit kind of about me, since it's kind of your guys' first time meeting me. I started in the insurance business about 20 years ago now. So I'm kind of one of the older guys in the business. I used to be one of the younger guys that shows up at the conferences. Now I'm the older one. So it's kind of funny how that happens. But I started actually in mortgage protection. So I used to have an old green Honda Accord, and I used to drive up and down the state of California. I usually, my thing that I would do is I would buy 50 old leads every week, because I was used to getting A leads, and you get like usually back then 10 A leads a week, something like that. I found more success was going to the middle of California. So if you guys are familiar with California, it's big green belt in the middle where we grow everything here, and it's pretty big, right? It's probably about 200 miles from Sacramento to LA, kind of in the middle. And I used to live there on Tuesdays and Wednesdays of the week. So I'd buy 50 B leads. I drive down to the Central Valley of California, and I just run mortgage appointments on Tuesday and Wednesday, drive back Wednesday night, rinse and repeat every week, right? Every once in a while, I go to the Bay Area here, but I really cut my teeth in this industry in mortgage protection, and I did very well at it. That suited me pretty good. I eventually moved into more of a marketing role for an IMO after that, kind of training agents, recruiting agents, that kind of role where I really kind of cut my teeth on learning a little bit more of the backside of this business rather than just sales. And then I met my old business partner in 2014. And that's when I really started diving into index universal life and indexed annuities. And so that's kind of what I've changed now for about 12 years. Since then, I've probably trained, I would say, over, especially with Heartland, over 5,000 agents now on how to write indexed universal life, how to write them correctly, what to say, what not to say, and kind of its topic right now. So I don't know if you guys have heard what's going on with Kyle Busch. Anybody know who Kyle Busch is? Anybody know what's going on with him right now in IULs?
Yeah, I've been keeping up with that. Somebody screwed him over with a way they wrote out an IUL. So tell us about that.
Don't know all the facts yet. What I've heard is there was a 1035 exchange in the middle of the policy.
Yeah,
What I'm assuming was in 2021, they passed the CARES Act during COVID, which lowered the amount of life insurance that you needed inside of life insurance. So that probably is what I'm assuming. The
yeah,
agent saw an opportunity, but 4 years into a policy, I think where he was, you're going to have pretty high surrender charges, probably somewhere in the neighborhood of, as if he funded it correctly, 25, 30%. So depending on how much they had put into the point, they may have lost a couple $1 million. And what I'm assuming now is that they wanted to surrender the policy and another 4 years in. So they're probably 8 years in total, but really four after the 1035 exchange. So that's where they're probably adding, hey, we lost $8.5 million. So I don't know. Obviously, I haven't seen any documents yet. I'm sure someone will get them at some point and you can and look at them. But yeah, it's a hot topic. You get somebody like Kyle Busch. Now, Pac Life is also notorious for creating what's called paper tigers. And we'll talk about this on another call eventually when we start talking about indexes, which is probably 4 or 5 calls down the road. But the AG 49 came out, and AG 49 is what's called Actuarial Guideline 49, and it kind of reined in how we illustrate IUL products. And
yeah.
what I tell people is imagine we have an auto mall here where I live. So you got your Hondas, Toyotas, BMWs, Chevrolet, all the car dealerships are right there in this little circle, call it the auto mall. So imagine I say AG 49 is like imagine there was one governing body that governed all these auto dealerships, and they all had a deal when someone went to go test drive their car, they had a governor on that car that could never go above 80 miles an hour. So regardless you test drive a Porsche or a Pinto, top speed's 80, right? Kind of levelizes the playing field. AG 49 did that, right? And it's since 2016, where AG 49 first came out. It is now AG 49A in 2019, and then AG 49B in 2023. So there's three different iterations of it. And I'm not going to go into it too much, but I will eventually on these calls. You guys will understand a little bit more. But
Mhm.
what happened with Pac Life is they found out during the first iteration of AG 49, you could build in these what's called bonus and multipliers, and they have asset charges. So if and with Pac Life's indexes, they had up to 6% asset fees. So that means if you took a down year in your index, you lost 6% because there's a 6% charge to access that multiplier. It's automatically coming off the beginning of the year. So I don't know. I have to look at the internal policy that they had, but it's just the optics of it, right? The optics of having a major guy who probably has a ton of financial advice from anywhere he can seek it, and him losing $8.5 million. You Google IUL scam, it's probably the first thing that's going to pop up today. So it's relevant. So I'll move on from there. But any questions on that? I mean, that's as much as I have. I have a little bit limited information, but I know a little bit about what's going on there.
You know, I will just mention, so this is why, guys, that we use advisors to help us. This is what they do, right? So everything that we do, we're gonna bounce off of Chris and his team and make sure that we're structuring it right, correctly. And that's what we have these guys on here for. They keep up with all that, right? So they're going to help us along the way. No reason to be scared. I think so many people are afraid to write IULs because they're so afraid of what they don't know. But if we got a good team such as this watching out for us, you're okay. We could structure it correctly and do it right. But main thing is just being honest in your presentation, in the illustrations, going over the complete illustration, and just doing everything right. And your IULs is a great product. So go ahead, Chris.
Yeah, no, I appreciate it, Darren. And yeah, and I don't mean to scare you, but it's important to understand the market and the world that we live in, right? And so,
Yeah.
IULs are a great product. I believe in them. I've been using them for a long time. I have one. My family has one. So, you if you believe in something, it's pretty easy to sell, in my opinion. So, but you can structure them the wrong way. And the
Yeah.
problem is why I have a job is the majority of people out there that are selling them don't know how to do it, right? They say I run into them and I always kind of pick on them. The World Financial Group, man, every time I see a Transamerica policy written on an IUL, it makes me just almost want to vomit. They're so poorly constructed. So
Yeah.
there's just bad information out there. So you're going to learn how to do these right. I learned from people that are on the board of Allianz that have been doing this for a long time. So I was taught from the right people. I also kept on training, kept on my approach. So not only am I going to teach you guys how to training, but on how to sell these. But on future trainings, as we go deeper and we get more acclimated with each other, you guys are going to learn how these products work internally too, which is important. You get on a call with a New York Life guy, and he's been told his whole career at New York Life that IULs are a four-letter word, and how dare you sell that? You know how to talk to them, right? So you'll have these bullets to go ahead and shoot. So first of all, let's talk about kind of a topic. IUL candidates and people, and I see a question popping up. If you guys have something that you need to address right away, unmute yourself, and Darren, I'll kind of let you handle the questions if I need to stop and we address it. And if not, we'll answer the questions at the end of the call. But anything that's pertinent, go ahead and stop me. I like dialogue. So let's talk about IUL candidates, right? Who's suitable for these products? And the first thing I always say, man, these products are not for everybody. So don't go out, you learn about IULs, you learn about annuities. Hey, man, you need an annuity. Hey, you need an IUL. This is an advisory type approach, right? So, like mortgage protection, for example, I had a slip. Someone just bought a home or they refinanced. They filled out the information. I know immediately when I go into that home what they think I'm going in for. Now, sometimes they forget. You go in there, you got to fight with them over why they filled out the slip. But at the end of the day, I got a direct need. You're like a sniper. You're going in, shoot, you're out, right? One stop close. These advanced market sales are more advisory. You got to slow down your approach. You got to ask questions. It's a questions-based sale. I can't tell a client whether or not I can do an IUL or an annuity unless I sit down with them for the first time and just ask them some basic questions. So we're going to find that out by finding out who our candidates are. So we want three components to an IUL. So think of, like, you heard the old analogy, the three-legged step stool, right? If I got all three of these, I'm looking pretty good. I'm going to be able to sit down comfortably. I'm missing one, I can balance on two, right? I'm pretty athletic. I'm losing two of them. I'm down to one. I'm pretty good, but one's not enough, right? I've probably fallen over at that point. And obviously, if I'm missing all three, not a good candidate. So it's the same way here, right? And these components are pretty simple: age and health, amount of contribution, or how much premium can they put in, the more the better, and then years of contribution. And I like to call this people's commitment to the policy. What is your commitment to putting this policy in? So, in terms of age, the younger the better, right? You can write juvenile policies at 2 weeks. Okay. You got someone in their 20s or 30s, man, that policy is looking pretty good. Low cost of insurance. They got a pretty long time till they're retiring. That's a good sweet spot. Around the age of 50, we got to start paying attention to what's going on. If I have a 50-year-old coming to me and they want to put $200 away into this plan, it's not enough money. It's barely going to cover the internal cost of that, right? Unless I had a carrier that's going to do that for about $5,000 of insurance, which they're not, right? Most are around 50 at the lowest. Some will go down to 25. I think Columbus may go down to 25. I'm not sure. Um, it doesn't make sense. That $200 is better served going somewhere else. So around the age of 50, we really got to start making sure, because not only does the premium got to be there, but what they're also running short on time. And time really is the number one factor in these, age and time. How long do you have? So you're gonna learn from when you work with me that I use a lot of analogies. I kind of learned that way. I think people kind of learn that way. And I use cars and cooking really as my two things that I kind of, most people are relative with. So think of a crock pot, right? Versus a wok. You have a wok, I go out, I get my meat, my veggies, whatever. I throw it in there, it's done within like 2 minutes, right? It's real quick, bang, bang. An IUL is like a slow cooker. I'm going to put that meat in or whatever it is. at the beginning in the morning. I'm going to put it on low for 8 hours. By the end of the day, it's marinated, it's cooked, it's simmered, it had to work. An IUL is like that. It takes time. The more time you have, the better, right? So, contribution, that all kind of goes together. Our rule of thumb on a low end is a zero behind the decade that they're living in. Now, if someone's in their 20s and they can only afford $100, guess what they also have on this? Guess what they also have? They have time, right? They got another probably 40 years plus until they retire. They're also probably going to have make more money later on. So if they can afford $100, cost of insurance for a 20-year-old is basically nothing, right? And you get to eat up the internal cost of that IUL. The first 10 years of an IUL fees are. Once you get past that 10 years, those fees are down to like less than 1% or 1% usually in year 11. So the hurdle in an IUL is the first 10 years for most carriers, right? And then the fees drop off considerably. So if you get somebody started in their 20s, it's a good start. And they're probably going to make more money later on and they have time. Time kind of works in people's favor here with IULs. But rule of thumb, 30s, 300, 40s, 400, 50s, 500 plus. 60s, it's really got to make sense at 60s. And we look at everything at a case by case basis, right? So these are very much gray areas, right? I'm not going to say, hey, if they don't have this, it doesn't work. It's a gray area. Remember, also, if they're missing one of these, you can make up for it in another arena. If I have a 50-year-old that wants to put 100 grand a year in it for 5 years, that can make sense. I can manipulate that death benefit enough with some term to have that make sense, right? There's enough premium going in there that I can structure that policy to work. Now, it's riskier than it is for 10 years, but we hit it 4 out of those 5 years on a positive return, we got a good shot at it. But I'm going to tell people that, hey, we can shoot for this. We may have to put more money in year 6 and 7 just to cover some expenses, but there's opportunity there. So it's very much a gray area. This is not black and white. Like I said, years of contribution at a very minimum, you want 10. But once again, you can put money in over 5, sometimes 7 years as a sweet spot with really big contracts. Premium financing cases are generally 10-year contracts. Um, but I like higher, right? Your average day-to-day blue collar, middle American, office worker, construction worker, we're looking for 15 years. That's what we want, or more. The more, the better, right? More time, more compounding interest, the less fees are hitting. So the longer these policies in force, the better they're going to do. And then it's really important. What is the purpose of the IUL? I'm going to teach you from my point of view why I sell these, why most clients come to me, what I teach, but there's also other purposes you can use. But you can't do everything. So it's important to understand I can't have $1 million death benefit, put $100 in, and get a big cash value return on it. You're going to take the policy either has to do one. You got to focus on one of these. Do I want the cash accumulation? If so, I'm gonna have a lower death benefit. Do I want permanent life insurance? If I do, I'm gonna have lower than cash value. If I want long-term care, cash value. Now, depending on how you structure that, that could be a self-funded long-term care policy, or if they're older, it could be more of the insurance cost. So that you can structure that in a number of different ways. For my younger clients, the cash value generally they can supplement their if they go into a home with the cash value by taking loans. So there's multiple ways to skin the cat here. And I say a combination two or all three, but once again, put an asterisk there. You can't do everything great, right? So I say, what's the term? The jack of all trades, but the master of none. Think of that in IUL. Jack of all trades IUL is a shitty IUL. Excuse my language. So it's very important that we're very pinpoint on what we're trying to deliver to our client.
Yeah.
So,
Hey Chris, mind if I ask a question real quick?
yeah, sure.
So you were going into, being able to fund an IUL, like that one client, let's say they're 50 years old and they want to fund it with $100,000 for 5 years. I'm not sure if maybe on this training or a future training, would you be able to go through an illustration or even an application on how we would actually structure that, with throwing some extra term life in for those 5 years, just so that way we don't, meet that net criteria?
Yeah, we can do that on another call. We'll do some illustration trainings. And really what you're doing, and each carrier's software is going to be a little bit different, but you're going to solve to the bottom, minimum death benefit, maximum cash value. That's pretty standard in all carriers, right? That's your solve for a section, right? Um, and then it's understanding that term capability that the carrier has and when to drop it off. So if I fund a policy for 5 years, I'm going to put a 5 year term on there and I'm going to drop it off in year six. And it depends. Sometimes it has to be longer, right? Maybe it's a 10-year term. It drops off in year 11. Term's pretty inexpensive, but what it allows us to do, it allows us to have that life insurance drop once that term is done. So our cash value and our death benefit are in what's called corridor. And so I just barely have enough more life insurance than I do cash value. So does anybody understand? We're going to go over this in another call, but we have what's called net amount at risk in an IUL. That's where the fees are based on. How much above the cash value does the company have to buy in term life insurance to cover that death benefit? Um, and so that's why once we get that policy right around here, the fees are very, very low. But it's a little bit more of advanced planning in that scenario. Good question.
Yep.
So the client profile, like I said, we need to develop a profile for all of our clients. And there's two, this comes with IULs and annuities. Like I said, I trained a lot of clients on annuities as well as IULs. They're hand in hand. So a lot of things you hear from Asher and team, you're going to hear from me in terms of the lead up and certain indexing and certain phrases. They're very similar. They're completely different use products, completely different. But there's very similarities because they're both fixed indexed products in the life insurance space. Whether you're doing IULs or annuities, there's two cardinal rules when you're doing a first appointment. And that is you do not talk about product, you do not talk about sales. I come into your home or I'm on a Zoom call or I'm in a telephone call and I'm asking you all these questions. All of a sudden at the very end of it, I go, great, John. I got a great product for you. It's going to be an IUL. You're going to love it, man. I'll be right. I'm going to run some illustrations from you. I'll see you next week. What are they going to do after I leave?
Google it.
Google it. Everyone's got little computers in their pockets these days.
Yep. They're going to
It
find out
was,
about
it,
and Dave Ramsey and Bush, and they're going to freak out.
and there's a whole lot of information on the internet about IULs. You get
Yep.
it from the whole life guys. You get it from the financial advisors. You get it from the attorneys out there. You get it from New York Life. You get it from the IUL people. It's a lot of
Yep.
information. Client gets on there and they go, "What? What?" Okay, now it's 50%. I would say probably 60% of the time they're not going to show up to that next appointment. So
Yep.
do yourself a favor, learn from my mistakes and the agents that I've worked with. This is the number one rule of losing a deal is talking about product or sales too early. Don't let the cat out of the bag, right? I don't talk about insurance, annuities, anything. All I'm doing is asking questions.
Yep.
So what do we need to know? And I'm going to have the profile pulled up here in a second so you guys can see it. But the basics, right? We need to know their age. What is their current retirement plan? Do they have a pension, 401k, 457? Roth IRA, maybe they have a ESOP, 403b. How much are they contributing? If they're not, how much do they want to contribute, right? I can't tell you how many people I've talked to that are in their 30s or 40s that think they're going to retire at the age of 55, but they haven't started saving a dime, right? And then they want to put $100 away. I got to be like, hey, John, I get it, but that's not going to happen, man. You're looking at living on about $200 a month. How's that look? That's you better start putting some serious money away if you want to retire at 55. And I'm okay being the bad guy because there's one thing that doesn't lie, and that's numbers. And I'm just going to show them the numbers. I don't make these up. Math is math. It's a truth, right? So it's okay sometimes to be the bad guy when we got to direct our clients into actually looking at what reality really is. And it's pretty scary with Social Security possibly going away at some point in the next, my lifetime possibly, and where most Americans are in really preparing for their retirement. It's pretty scary. I mean, it's going to be a problem. So what does the employer contribute? once again here, we don't take away matched money. That is free money. We play with money that is not being matched. If an employer is contributing money, in my opinion, it should be illegal for you to show them moving that away. That is essentially doubling their money from day one, is a tax write-off for them. It's got multiple layers there. Don't try to take everything. At the end of the day, we want to be an add-on to, not the only ball game in town. Okay. What is their retirement age? Hey, when do you plan on retiring? Most people say 65, 67, right? What are their goals? How do you feel about taxes? Taxes are going to go up. I know. So why are you putting money into your qualified plan? You're going to pay all your taxes later, right? What's their risk tolerance? Our sweet spot obviously is conservative to moderate. Risky people, hey, go put your money in the stock market. And then set a second appointment, right? I usually set my second appointment. So today for me, it's 9 o'clock for this call. I would say, hey, Darren, uh, we met today at 9 o'clock on Wednesday. Is that normally a good time for you when you and your wife are free or you're free? Yeah, perfect. All right, I'm gonna send you over a Zoom invite, or I'll drive over depending on how you're doing your appointments.
Yeah.
Face to face still being the number one, but Zoom calls, once COVID hit, Zoom calls changed everything for these type of sales. If you would have told me prior to COVID that you can do these type of sales non face to face, I said you're going to waste your time. COVID changed that. I've sold a $2 million premium financing case over a Zoom call. I've rolled over $1 million in an IRA on a Zoom call. Before COVID, no chance of that. So COVID kind of changed things for the better for our profession, in my opinion. But I'm going to set an appointment. Hey, I'm going to email this Zoom call to them immediately. And if they're like me, and I tell agents when they're trying to talk to me, hey, you need to send me an invite on my calendar because I look at my calendar, it gets built up pretty good. And if someone asks me to join a meeting and I say I'm free or not, if you haven't booked that time with me, there's a chance you're going to lose it, right? So get that on their calendar immediately because they're like most people, they're using their phone, they're using their laptop, they're going by their calendar throughout the week. People are busy. So get that invite to them immediately. Set that appointment. And if you don't have an email that you can send that does an actual invitation with a receipt on the invite, you need to learn how to do that. It's very simple. Outlook, Gmail, they all have it. It binds people in, it binds to their calendar. Very important. So here's our profile, and this is available to all of you guys. I'm actually probably going to change the name of this here pretty soon after the Bush thing. TFRA is an acronym used in digital marketing. I never even thought of TFRA, but all of a sudden, when we started getting into IUL sales and annuity sales, the digital marketers came up with TFRA accounts for ads. I'm probably gonna have our internal team look at that after some of these things. I may change the name of that just to client profile, just to maybe not put anything on the radar to the attorneys. But tax-free retirement account, right? That's what we're looking for here. Kind of went along with our digital marketing strategies we do. Everything on here has a purpose. Okay. Number one, if I have a client, I'm personally using this, but this is also created for you to be able to do it and then send it to me so I can help you design a case. I'm not going to be there with you on your first appointment, but if you send this to me, it's kind of like I was, right? Now, it's very important you get the information. You send this back to me with, half of this thing filled out. I may not be able to help you. I say, hey, go back. We need more information. So, name, date of birth, age, um, gender. Obviously, this is for me. Sometimes names are very. Uh, oh, I just saw. Are you guys not able to see my slides? Am I not sharing my screen?
Not yet.
Oh my gosh.
Should be able to, but yeah.
I apologize.
You're okay.
Where is sharing? Wish you guys told me that like now 10 minutes ago. I've been blabbing on just like all right, so you guys can see the screen. I apologize.
You're good.
So here's the profile form. Okay, you can fill this out on your computer, on your tablet. You can print it out and then write on it, old school. I used to do that until my handwriting's so bad that I can't even read my own handwriting. I started doing it on my computer now.
Chris,
This
where
is
can we
available
get
to
this
you
at?
guys.
Where do
What's
we get
that?
this? Where can we get this
I can send
format?
it to you.
Okay,
Shoot me an
perfect.
email. I'll send it to you.
I'll do that. Jane, get that in line and send that to all of our agents, and let's get it put into our website and CRM. Okay.
Yeah. And if you want to also, you can rebrand this. It's pretty easy to do also to your agency. So entirely up to you if you want to do that. Take the colors out and all that kind of stuff.
Perfect.
So this is for both of us because I can help be there for you if you email this to me. That's what it's designed for too. So quick question, and like I say, everything here has a purpose. You may ask, hey, why does he ask the number of years at his current position? Why would I do that? It has nothing to do with an IUL, but there's a sales opportunity here. Anybody know why I may ask that?
See if there's an old 401k out there.
That's the winner. I got somebody in their 40s that started a job 2 years ago, 3 years ago, even 5 years ago. What's the likelihood I'm going to ask them, hey, do you have a retirement? What did you do before this? I'm immediately, because I've been doing a long, I'm a trigger. Oh, he's only been here for 5 years. There may be a new IRA out there. What'd you do before this? Did you have a retirement account? What did you do with it? Oh, you know what most people do? They do nothing. Or if you roll it into your new 401k, you can roll that amount out. Most people don't know that. Not the interest, but the amount that you rolled in. So, retirement age, right? Obviously important. How much money do you make? Well, I want to know that I'm not pulling too much out or they're not putting enough in, right? I kind of want to understand everything. What are your monthly contributions? What are your account values? Risk tolerance, right? Tax beliefs. Why do I ask about life insurance? Well, obviously, we're life insurance salesmen. Maybe I can get them a better term. I don't know. Also, there's money going into a life insurance plan. I'm probably going to have another illustration taking that money out of that term plan, or it's a 1035 whole life policy. There's opportunity there, right? Does it make sense? How much is the coverage? When did you get it? When's it going away? Then obviously the spouse, same thing. What does your spouse do? Where do we go? And then there's one more page here. What about your children? Do you have any children? Some people kind of don't ask. I say about 10% of the people that, why do you need to know about my kids? Well, just curious, have you started any college funding for them? And then I asked them a question. Hey, what does retirement look like for you? And that's kind of in the bottom here. And this is when I take notes. I let people talk to me, and I kind of asked them this question. What do you see you guys doing in retirement? Are you guys world travelers? Do you plan on getting an RV, travel the country, get on a plane, travel the world? What about joining a country club and playing golf? Or maybe you just want to hang out with your grandkids. What does that look like for you in retirement? Okay, what do you think you're going to need on a monthly basis for that? Right? And so I'm just writing this down. And most people are just going to tell me, right? And then I'm going to ask them, hey, besides the $400 a month that you're putting into your 401k, did you want to contribute any more to your future retirement? Oh, yeah, I want to do about another 400. So I'm just trying to gather, where's the money going? What's their capability? What's one objection after I've done this that I'm never going to get on my sale? Anybody have a guess? What objection did I eliminate that I used to get all the time during mortgage protection? And it's your number one objection. I can't afford it. Right? I know they can afford it. I haven't gotten that objection in over a decade. You know why? Because they told me where all their money's going, and I'm just going to reallocate from somewhere else. Right? So no more money out of pocket. So like I said, after this appointment, we get a timeout. Right? Who's going to take the last shot here? This is where we get to divide a plan. So email me the profile. This is also where you're going to learn a lot on how to structure these policies. Pretty soon after you send me a couple of these, you're going to know how to do it on your own. They're pretty self-explanatory after a while. Then there's some that, hey, what does this look like? Can we do anything for this person? Right? Maybe we need to get creative. So if you come to me and you go, hey, Chris, I need 3 illustrations. I need a 500, 1,000, and 2,000. I immediately know you're not going to make that sale. They'll show 8 different illustrations. Do you go to the mechanic and say, hey, give me 3 different options on how to fix this wheel? Or go to the doctor, I have a broken knee. I need 3 options. What surgeries can we do here, doc? What are my options? No. Think of yourself as a professional. You are the professional. We know we need a targeted approach here. I go back with 3 different premiums. I know you're not going to make that sale. Their confused minds don't make decisions. I'm going to have one sale. This is what you should do. This is why. This is why we're doing it. Now, if I have extra money like a life insurance that I'm going to put over or 1035, I'm going to have another illustration because after I've made this sale right here, oh, by the way, we can add that $200 of your term policy, and now we just doubled your income in retirement, right? So there's times you're going to do that, but we're not going to be agents where we think illustrations are going to sell themselves, and you're going to do yourself a disservice if you come back. So when agents ask me for three different illustrations, I say no, pick one. Which one do you think's better for them? I'm not going to send you three. Wasting my time. It's wasting your time
Right.
too. You're going to go back and you're going to fall on your face.
Yep.
So have a better plan going into it, right? I always show current path versus new path. Know the numbers before you go into this. I use MoneyChimp 401k. So it's money. If you Google MoneyChimp 401k calculator, it's a very simple calculator. You'll see it in another call that we do on how I run a comparison of current path versus new path. So when we got agents on digital marketing campaigns and we're running these sales, about 65 to 70% of our deals are just reallocating what they're already doing. I always say, how many life insurance sales could you sell if it was free? It's not necessarily free, but it's no more money out of pocket, right? So let's get into the sale. This is the bullet point of the sale I've been doing for over 12 years. It has not changed. It is simple. It is replicated. I've taught agencies and agents how to do this, and you will close if you do this correctly and you own it and you understand it and you have the right client about 80 to 90% of the time. It is a very, very simple sale, but people can digest it. They can understand it. So front talk, right? Why should they listen to you? So hey, I've been in the financial services industry, and I've already started this, by the way. I've done this. My front start talk started in my first appointment when I was doing the client profile. I've already gone into who I am. I've already done that, just reminding them again who I am. So in that first appointment, I'm kind of setting them up for this sale already. What I came up with is an IUL. And I asked my clients, are you familiar with an IUL? Now, this webinar or this, whatever you call it, PowerPoint, I created this about 4 or 5 years ago. I redo it every once in a while. With digital marketing, that number is probably at 75% now. With all the social media campaigns now on life insurance and infinite banking and TFRAs and be your own bank, more people know about IULs than they used to. When I started this, nobody knew what an IUL was. That was prior to, I mean, social media was still going on Facebook, but the ad explosion hadn't happened yet, right? Now we were in this big ad explosion on social media. More people know about life insurance, right? But I tell them an IUL is an acronym for Indexed Universal Life. Are you familiar with a Roth IRA? Everybody knows what a Roth IRA is for the most part, right? If they don't, I'm a little worried about them. Well, what I want you to think about before I go into these numbers and this illustration and this plan that I've kind of created for you, think of an IUL and a Roth IRA, the life insurance benefits of an IUL, the tax benefits of a Roth IRA, and those merge together somehow. You're going to have a good understanding of how this works for you. So, number one, I want to protect your family and your retirement income. God forbid something happens to you. I want to make sure your family's protected, right? At the end of the day, we're in life insurance. So, John, you're putting $400 a month away into your 401k. I'm going to reallocate this money into your IUL, okay? Or the other thing, they said they were comfortable 400, right? Either way, I know that 400 is a safe number, right? They're either reallocating or they're putting away. Now, side note here, I'm in my actual sales going to do $300 a month. Anybody know why I'm doing a $300 month exchange into the IUL versus a 400 into the qualified plan? Anybody know why I'm going to do that? What benefit do they get in their 401k by putting $400 a month in?
Tax deductible.
Tax deductible. I'm telling them to pay their taxes now. Why going to cost them $100? Hey, same money out of pocket here. I'm gonna have you pay your taxes today. Let's just assume 25%. So instead of that 400, I'm gonna have you put 300 in. Okay, but everything's gonna be tax free at the end of it. Okay, so in reality, I'm gonna drop that immediately, right? Otherwise, I'm not. The numbers aren't real. I'm not factoring in that their tax obligation is in the beginning. So John, this gives you $255,789 of life insurance. That's kind of a weird number, right? Well, the reason why that's an odd number, I didn't stay at a Holiday Inn last night, John, thinking how I can get you a weird amount of life insurance. This is based on IRS Code 7702. The federal government allows us to put money inside of life insurance, but you have to have a minimum amount. We put in too much money into this plan, Uncle Sam's come knocking on your door and say, guess what, John? That life insurance plan that you were building for the tax-free income out of it, you put too much money, it's taxable now. So you can do that. So this is the minimum we can do based on you putting $400 a month. Now, keep in mind, that's not going to happen. The federal government's not going to come knocking on your door, but I use that in every appointment. I use that door knock analogy. People kind of laugh at that. But we want to take advantage of this tax code, 7702, right? It's why we're putting money in life insurance. Keep in mind, John, I get you $5 million. About that and then something. Yeah. I don't
Sorry.
think that was a question.
Let me take care of that. Go ahead.
All right. So I can get you $5 million of life insurance coverage for $5,000 a year, but that's not the point of it. We want the absolute least amount of life insurance possible that the federal government will allow us to put into this account. But from day one, your family is protected. God forbid something happens to you, your family has $250,000. And if you ever get a heart attack, stroke, cancer, you can't do 2 of the 6 daily living functions like feed yourself, bathe yourself. You're going to have access to these benefits while you're living. But like I said, we've minimized these. So this is my first salvo into the illustration. What did I just cover? This is a life insurance contract. Also, we're taking advantage of a tax code. Because every time I say life insurance, you'll notice in my presentation, what is the benefit of using life insurance? Because if I go around the street telling people to put money inside of life insurance, they're all going to run away from me, right? I'm going to be that Ned Ryerson from Groundhog's Day. So you got to talk about the benefits, the concept of it. Otherwise, you're not going to make a sale. Part 2, protection from market risk. We have our current assumption illustrated rate. A lot of times it's called non-guaranteed at the very far right of the illustration. Does anybody on this call know how that number is derived? They're all AG 49 makes the carriers all use the same index and timeline. Anybody know what it is? All right, no guessers. It is the 65-year average of the S&P 500, depending on that carrier's cap and floor. Every single one of them. So regardless if you choose the Barclays Index or the NASDAQ or the Hang Seng and National Life Group, Columbus, Allianz, they're all an iteration of the S&P. Now, there's ways to manipulate that S&P on how they do these bonus and multipliers and guaranteed bonuses and all this kind of stuff so they can still manipulate it, which will probably go away when the new AG 49C comes out. But all of them are based on the S&P 500 and the 65-year performance based on the current cap and floor. So what I tell my clients, hey, John, you see this 7, and each illustrated rate is going to be different, right? Do you see this 7.1%? This is the 65-year average of how our plan is performed. We use the S&P 500. Are you familiar with the S&P 500? Most people say yes. And if you're not, the S&P 500 is an index of the 500 largest publicly traded companies in the United States. It's kind of the benchmark. If you pull up your Apple phone, if you have an Apple phone, and you hit stocks, you'll see S&P. It is a benchmark of the U.S. economy. It is positive 70% of the time. And on average, it will cap out more than 80% of the time, 70% of the time. It is a powerful index. Kind of side note here, volatility control indexes in this industry, whether you're doing IULs or annuities, they are traps. S&P 500 is your friend. Find a carrier with a high cap, use it. I've had annuities that have gotten 4 straight years of zeros in these volatility control index that have backcasted 12% returns when the S&P 500 did 20% year over year over year. And I got to go back to my client and tell them their annuity, their IUL did zero. It's a pretty tough conversation. I've had a lot of them since 2021 to 2025. Well, 2024, I started changing everybody out. But it was a tough 4 years. What are you talking about? I got nothing. The market did 21%. I know we didn't have it in that index. The S&P index is a very expensive index. BCIs are not. So just for you guys, there's a lot of it. There's a lot of BCIs out there. Find a carrier with a good S&P 500, both annuities and IUL. It's okay to use volatility control indexes, but you got to be cautious with them. And that's every carrier I've ever seen ever, except for Allianz and AIG. They're the only volatility control index I've seen constantly perform year after year after year. And AIG had the first one that came out. It was a Merrill Lynch strategy, Bank of America. And I don't
Chris,
know. Yeah.
let me just ask you all, since we're on the subject, I don't forget. So, which ones do you recommend? And I'm looking at putting contracts underneath Heartland. Which carriers do you guys like to use personally? Do you use?
For
Um,
IUL,
yeah, for the IUL.
F&G, Columbus,
Mhm.
Allianz.
Those are the three
Allianz
we
being
have.
a little bit tougher. What's that?
Yeah. Which one?
I said Allianz is a
Okay.
little bit. We only put those big case designs generally with Allianz, but F&G, Columbus being our core carriers.
Love it. Those are,
They,
just so my agents know, those are the three that we have with you guys. So that's beautiful, right? That's what we're looking for. Good. And
and the other
I
thing that
Tawana was on this call, or actually, I think she's on it. She did some research and she pulled up Columbus and had double A plus ratings, like every beautiful, great remarks when she did it. So she sent me a text back and she said, "Darren, I just pulled this up and you told me that you like Columbus. I can see why. So good ratings,
yeah.
great company."
And also, there are mutual. They're one of the only mutual companies still out there. So if you've got someone that's done research and you say, "Hey, what's the best insurance company?" Put cash value. Say mutual company. Columbus Life is a mutual company. So it's really up to you guys which carriers like. All three of those carriers are good. Allianz is a great carrier for high net worth clients. I'm not going to take my day to day writing a dissertation to get an application through. Plus, contracting is a total pain in the butt. But they're any premium financing case, I'm going to Allianz. Their
We've got
product is fantastic.
Alan McBroom's on here, and he does our premium financing, and so he's. I'm glad you made it, Alan. If you have any questions toward the end, you guys throw them at him. Okay, good.
Yeah. So 65-year cap and floor, right? And I tell people, my clients, so I got to kind of get back on track here. Hey, so we use the S&P 500, but we have some rules when it comes to it. We have what's called a cap and a floor. Let's just use F&G, for example. F&G is a cap at 12%. One of the better caps out there. Caps are starting to come up a little bit now too, and we go over caps in later trainings and why they go up and down. Um, Cap of 12%. What does that mean? S&P 500 does 5% for that calendar year, you get 5. If it does 10%, you get 10. If it does 15, sorry, you're capped at 12%. You're never going to get above a 12% return in a calendar year. Now, the reason why that's a good thing is we also have a floor. And we have a floor in F&G, for example, of a quarter of 1%. So the minimum, the worst thing we're going to ever do is going to get positive return of 0.25%. And then every year we have what's called an annual lock and reset. What that means is we're going to play the game with the market for that year. The low end, we're going to do 0.25. On the high end, we're going to be 12. So we're always going to be in this corridor every year getting a positive return. We're going to lock in your gains, reset. Do it again, lock in, reset. It's like a ladder approach. We're always going up percentage-wise in the market. We're never going to take a down year percentage in the market. Notice why I say percentage, right? It's very important to understand that if you don't put any money in this plan and maybe you got a 0% return and that floor didn't outpace the expenses, there is a possibility at some point in this contract, maybe when you're taking loans out, that your cash value could go down, right? So it's very important to understand when you say, "Hey, I'm never going to lose money," that's not necessarily true in an IUL, right? Versus an annuity where if you take a 0 a year, you don't go down, and if there's no expenses in that index, you take a true zero as your hero. So it's very important to understand the difference in that, because you can lose money in an IUL by the cost of an insurance expenses going out or any other fees that maybe haven't run out in the policy. And then I take them to the historical averages section, and this is really important. I'm not going to be able to show this to you on today's call, but I will on a subsequent call. I see here I got to hurry up. We only got about 10 minutes left. I'm going to go through the 20 years of the historical averages section and go over S&P 500 versus my S&P 500, right? Pretty similar. Sometimes we beat it depending on the carrier, okay? Part 3, protection from unnecessary taxes. John, you told me you're going to retire at age 65. So for the next 27 years, you're going to put in $400 a month into this plan. Now, instead of money coming out of your check like it does currently in your 401k, they automatically deduct it. We're going to pay taxes on those monies. It's going to go into your checking account, and it's going to come directly out of your checking account into this plan. Now, because of that, we've already paid taxes. The money is now non-qualified. And because of IRS Code 7702, when we pull money out, it's going to be tax-free. So at age 65, you contribute about $134,000 into this plan. Now, this rule is for you guys, okay? The 10% rule. On average, if you have a carrier that has a good cap and floor above 10%, they have a participating loan of 5% guaranteed or lower. And if you don't understand what a participate loan is, we'll go over that again another time, because loans are different. You will be able to, your client will be able to take out on average historically 10% of that cash value amount when they start taking loans for the rest of their life. The return and the loan amount should be able to last them until they're 100 years old on average. Okay. This is not me coming up with this. I've ran illustrations. I've also talked to the carriers. I've asked the reps, hey, what is your thinking on this? Where you get anywhere from 8 to 10%. Okay. So, John, you're going to pull out about $33,000 a year tax free, right? The money's post tax. You've already paid monies on these taxes. You don't have to do it again, right? And I'm going to show you the ROI on the plan. In every single IUL illustration, they have either a 5 or a 10-year balance. How much did they contribute? How much did they take out? It's black. It's bolded out, right? So I'm going to go over the ROI. John, at 75, you still contribute that same $134,000. You've taken over $330,000 out of this income tax free, and you still hope, and if God forbid you pass away at 75, your family's getting over $200,000 of tax-free life insurance benefit if you passed away at 75. But I run it one more time. Hey, but most people live to 85. Okay, so this kind of going into the close here into part 4. So I'm going to run the ROI one more time to age 85. Okay, John at 85, still put in 134,000. Now you've taken over 700,000 out of this tax-free. And not only are you not paying income tax on it, it also doesn't affect your gross income base in your tax returns too. So your 401k, your Social Security, any other retirement dollars that is registered as income, the IUL is actually not even registered as income. So you're not paying any capital gains, you're not paying any income taxes on it, and it's not growing your taxable income amount any higher than what the other sources are taking out. So you're lowering your taxes in a number of different ways. So at 85, you've taken over $700,000 out. You still got about $120,000 here in life insurance benefits. But like I said, I wanted to make sure you don't outlive your money. So I ran this all the way to age 100. So if you left to 100, you've taken over $1.5 million out of this plan. We're going to make sure we project and put the necessary requirements in place to make sure you never run out of your supplemental income. And once again, why did I put supplemental here? Because this is a supplement of everything else they're doing. I don't want to be the star of their show. I want to be the backup catcher that hits singles in the World Series, right? So from day one, your family was always protected and they will always have some sort of life insurance benefit. I'm going to walk them back through the policy one more time. So, John, what do? We protected your family in retirement. God forbid something happens to you. There's some life insurance benefits here. but we're minimize those because we want to take advantage of IRS code 7702. You protected you from market risk, whether you're putting money in or pulling money out in the retirement, you're guaranteed to never lose any money percentage wise in the market because we have those guarantees, caps, and floors, protecting you from any unnecessary taxes. Remember, IRS code 7702. We're going to take these dollars out. We're putting in post-tax dollars because we've already paid taxes, and because of the tax code the government has allowed us to take advantage of, we're going to get these monies out income tax free. And then lastly, I don't want you to become a greeter at Walmart when you're 85 because we didn't plan. So we're going to protect you from outliving your money. So here's the close. Do you have any questions on how this works? And then that's it. I don't need anything fancy. Just ask them. Do you have any questions on how this works for you? Now, what is my cardinal rule now? Anybody, this is just a kind of an insurance question. What is the rule now for me to either, my sale is either going to go or it's not going to go?
Let them
What
talk.
can't I? What's that? I
Don't
think you were
talk.
right.
Let them talk.
Let them talk. They've got to be the first to speak. After I've asked that question, I've been on a Zoom call with another agent that asked me to help him. It was a really big case. And I told him, hey, regardless of what happens, and I asked them this question at the end to close it, you do not butt in. In fact, mute your Zoom call. And had the client literally staring right back at me on the Zoom call for over a minute, did not answer the question. It was very awkward, but you got to hold tight. If you start talking, you've lost. I've done it myself. You get nervous, you try to sell it again, boom, you're done. You got to let them talk, right? 60% of the time you do this, they're ready to sign up right there. Oh, everything looks good. Let's go, right? I'm going to encourage questions. Hey, are you sure you understand everything? Blah, blah, blah. Like, I want to pull out a conversation here, right? I want something. I don't want them to have something in their head that they didn't ask that is going to trigger them to cancel down the line. I want to encourage a conversation. About 20% of the people also are going to have questions or objections, right? Objections are just questions that need to be answered. Okay. And I'm going to go back to the illustration. Every question is going to have something that I did already. And it's usually me just going back and reiterating something. And then I just say, hey, so you like the information on this page? Great. Well, these are just numbers on a page, right? We do need to get a formal offer from the company. They're going to make sure that there's some life insurance benefits in here. We got to make sure you're healthy. Also, they're going to make sure you're a U.S. citizen and you are who you say you are. People try to launder money through these policies all the time. So they're going to do a little background information to make sure that you're a U.S. citizen and you have a legal driver's license, that kind of stuff. Also, going to make sure this program suits you financially. So there's going to be a financial review as well. So they're going to look at that. We need to go through underwriting. If you have a paramed exam, I'm going to set the parent. Now, with most carriers, you don't even need a paramed exam anymore. But if I do, I'm going to set it right there, right? Hey, I'm going to have an examiner come out. I'm going to pay for them. They're going to piss in a cup. They're going to take your blood, height and weight, blood pressure. They'll be out here next week at 9 o'clock, same time we did this appointment. Now, when I first started this, you need an examiner every time. Like they didn't have these. And they were starting to do the accelerated underwriting, which just meant you're going to wait a week or two until they tell you to go get a paramed. So it's completely different than it was back when I first started these. Instead, it took every policy took 6 to 8 weeks to get done, every single one of them. Now it takes 6 to 8 days, if that. So it's just kind of a little joke, right? What's your social? Like if they're not going to give you a social, you don't have an app. But I'm into the application and I need to get their information. I want to sell this policy. I want to do it right here. All right. I need to ask you some questions. What's your social? So you got to button up your sale here. There's some things that you're going to have to do. If you need an exam, set the exam. If they're contributing to a 401k or some type of other account, they need to stop contributions. It usually takes 2 weeks, 2 to 4 weeks to stop this automatic contribution. If your client gets a deduction out of their check and they get drafted an account by the insurance company, good chance they're going to cancel your insurance plan. I've seen it. It's happened to me. I've seen it to the agents I've trained. If you don't plan this, Accordingly, you're going to lose the policy. Go all the way through underwriting, get approved. They draft. Oh man, they overdrafted me. They took $400 out of my account from my check, and you guys took $400 out. Put the money back in. Right? You got to plan this. Make sure you set the drafts up correctly. When do you want this money taken out of your account every month? 15th? Okay. I put it in the notes section to the underwriter. Make sure this policy is issued on the 15th of the month, and every draft is taken out of the 15th of the month. That is your responsibility to do that. Give them the expectations of how long the process is going to be. I can't tell you how many agents I know that wrote a policy. They don't talk to their client for 4 weeks, 5 weeks. They come back, and the guy's forgot about you, right? Or that gal. Follow up once a week. Another thing that's changed since I started doing this, text messages are professionally acceptable these days. They weren't
Right.
when I started. Me and my business partner said, do not text our agents. We had a very controlled distribution for IULs and annuities. Don't be unprofessional. Texting is accepted. Your text message will be seen within 10 minutes, 94% of the time. That's studies. So guys out there that are texting gals and they're not texting you back right away, they saw it. They just don't like you. It's just a facts, right? This is just sales. So texting is professional. And most people, they don't want to call, they don't want to talk to you. They will take a text is fine. We're getting lazier these days, right? So just text them once a week. Hey, this is what's going on in your policy. You got to deliver everything. IULs, annuities. You got to resell the policy again. Make sure this policy stays in force and they're your client for life. So I came up with this strategy, or let's say this strategy, this analogy with an agent that I've worked with for a long time. And all of a sudden, and he's a great salesperson. He's been working with me forever. And he was on the digital marketing campaigns. And he's like, man, Chris, I sold 6 applications. All of them got approved, and all 6 of my clients didn't take it. All approved, perfect. Everything went through, all 6 in a row. And I'm like, and his name was Rufus. I'm like, Rufus, that doesn't make any sense. I know you're good at this, and that's just those numbers don't make any sense. I'm like, let me watch your next presentation. So he used his personal history in his sales. He's a retired California highway patrolman. He had a 405 or 457 and a 401k with the state. He also had term insurance. Keep this in mind. Why do we go to Morton's? If you've been to Morton's or any kind of higher end steakhouse, think of a plate with lobster, filet mignon or T-bone, whatever steak you like, garlic mashed potatoes, and then you get a side of broccoli. The life insurance benefits are the broccoli in this sale. So if you concentrate on life insurance on this sale, your clients are going to think I'm spending $5,000 a year for life insurance. And then they go watch this term quote commercial. They can do it for 15. Why am I spending that much money? You got to talk about the other benefits of why they're doing it. Obviously, we talk about life insurance. You heard me talk the whole first section. It's talking about life insurance, right? But that's not why they're doing this. Okay. So and I say that to you here because I see clients that hit the life insurance too much. And we've got to hit it because we are life insurance salesmen. We are selling life insurance. But at the end of the day, most people are looking at the cash accumulation and the benefits internally inside this policy of why they're going to overfund a case. So that's my time today, guys. I know we've got a little bit over, but I still got time for some questions before I got to jump. That is my cell phone. That is my email address. Like I said, I am a resource to you guys. So any questions before we move on here?
I'd like to comment. Thank you, Chris, so much. It's meant the world to me that you came on and short notice and you did this for us. Going forward, we have lots of agents here that writes a lot of business, and we need a little bit of help right now. We're kind of transitioning, but we need that Chris Miller help from you and your team. What would that look like going forward if we have clients even today or tomorrow? Do we get on your calendar? What do we need to do to get your assistance and help on stuff?
Yeah, what I generally say is, you can send me an email with your client's information. Uh, if you know what illustration you need, you can send me age, state their work. You need the state, right? Because all paper has to have an illustration. What's the premium? What's their name? All that kind of stuff. How long do you want this policy? Do you want to see loans? You can send that profile information in, and then generally what I tell people is I need 24 hours, just depending what's going on in that day. It could be immediately, but I may be training an agency, or I may
Right.
be traveling. It may take me some time to get to it. There's
Get
also,
it.
if you need illustration, there's carriers. You can call carriers. You can send it to me. If you need me to help you case design, I'll get your information and then I'll say, hey, I'll call you at this time. Are you going to be available? But calling me like at 10, 11 o'clock, we're all busy, right?
Yeah. Yeah.
That may or may not hit, right? So the best way to do it is if you're going to send me case details, do not text them. Email them. If you text me, I'm going to look at it. If I'm doing something, I may forget about it. Text messages aren't unreadable. Email, I can look at it, unread it, know I got to get back to it. So any case information, you got to email it to me. You can text me and say, hey, I just emailed you a case. When do we have a chance? And I will text you back, hey, I can call you and look to it. Or if you just need an illustration, I can get to it as well. And like I said, just depending on the carrier, you can also call the carriers too. But we'll also teach you guys how to run illustrations, because once you start running your illustrations, you're really going to understand these a lot better.
That's right. Chris, would you be opposed to maybe coming on? I asked Asher if he'd come on one time a month and do these trainings with us, or would that be something we can do it at 11 each time if that's something you could fit in your schedule?
Yeah, I mean, we can even do it bi-weekly or
Okay.
monthly, whatever you guys want to do.
Okay.
It like the
Oh,
full training in terms of all the training is going to take about 6 to 7.
why
Oh,
don't we
and
do
we can go even more, and that's not even including illustrations. So we can, depending on how in depth you guys want to go. I mean, we can keep it at sales. Like there's trainings where you talk about loans, you talk about crediting strategies. We talk about how IULs were even came from whole life insurance and what's going on. Like, so there's a number of things we can do. But yeah, like just give me at least some notice so I can make sure my calendar is not booked at that time, and we could go from there.
why don't we go ahead and look in? I'll have Jane send you this over, but why don't we look at every other week then? If you're willing to do that, every 2 weeks, have it put it in your calendar and it just ongoing. We'll do it every other Wednesday at 11 o'clock, and I'll let Jane coordinate that with you. But if you're willing to do that, team, what do you guys think? Thumbs up? I mean, Chris is great. Thank you for doing this. Any comments for Chris? Put in the chats if you have something you want to say to him real quick. But thank you, Chris, for all this. Thank you. Yeah, I'm just reading some of these. Uh, you guys unmute yourself. Somebody unmute and tell us something real quick. Michelle, Danny.
I would
How much
love to
more?
go over everything if possible, every other week. Just
Uh-huh.
the breakdown of the sales, the loan. I think for some of us, we know the logistics of it, but for others, I don't think they're very familiar. So if we could just do a breakdown of, beginning to end, starting with the basics. And
Yeah.
then maybe in each call, whatever you're going through that day, if you could show us on the illustration towards the end as well.
Yeah,
Yeah, just to
absolutely.
piggyback off of that. Sorry, I didn't mean to interrupt you, Chris, but yeah, just going through the illustration and because I know I've met with Asher going over annuity illustrations and just the verbiage that he uses and the way he explains it. It's very easy to understand. So I was wondering if you'd be able to go through kind of very similar through the IUL illustration and just like touching on the key points that you really use as like your selling points and like the highlights of what you really want the client to know.
Yeah.
Very
And that
good.
very much is that bullet point that we just went over. That is the sale. And then the second call that I always do on sales is essentially the same call, but it's with the illustrations and where I'm using that illustration. So it's a little bit more a little bit more in depth than this first call. This first call is just giving you, because you see here we took us over an hour. It's giving you the basics on what we need to do, and then this is a repetitious thing. You got like you see, like for me, I've done this so long, I could close my eyes. I just go right through it. I've probably done this sale 30,000 times with all the trainings and all the actual live appointments. Like I've done this, I've sold it. It's not just me just, saying, hey, this is how you do it. This works. So it's a repetitious thing. And so we'll do the sales again, and then you do it again, and then you do it again. And for me, it took me when I was with my old business partner and we became partners, he was already doing this stuff. It took me a month with him working hand in hand together, me doing it, to all of a sudden where it just became natural. But I was doing it every day. So you got to put the work in a little bit in order to do it. And I'm going to make it look really easy because I've been doing it for 12 years, over 12 years.
Yep. Beautiful. Good job. Guys, thanks. Appreciate you hopping on this call today. It looks like Big Red and I is getting ready to head to Dallas. We're going to go to the 8% Nation road show. We're going to be there tomorrow, but we'll be available. I'll be available on my phone throughout the travel trip. If you guys want to call and talk, hang out, visit. I think he's down there right now making a sell. So appreciate all of you guys. I think my advanced market team, Danny and Kat, and Michelle and Helen and Misha and you guys. What I'd love to do is get with you guys during our next committee meeting, and I want to see if we can't maybe use what Chris did and build a template that makes it easy that we can kind of flow so we can give it to all of our agents so that we have a step by step. So that's something we want to build for agents first using this. Guys, I would encourage everybody. This is recorded and you're going to be able to go back and watch it. Go back and watch it 2, 3, 4 times, right? Until you get it in your head and get it over and over. Chris, thank you, brother. We'll see you in a couple of weeks and you'll be hearing from me here shortly. Go.
Real quick, when you email me for that client profile, I already have a built out bullet points that you guys can copy. So just say include the bullet point script. It's already done. It's Hartland branded. You can rebrand it, and I'll send it to you guys.
No, don't even need to be rebranded. We're part of Heartland now. So love it, Chris. Thank you so much, and we will definitely get that. Jane, reach out to him and get that profile, get that list from him. Okay, love it. Thank you. See you guys around.
Thank you.